There's no way that you can win in trading doing what you don't understand. Many beginner traders remain beginner traders even after 5, 6, 7 years because they were well trained in error. You hear a person saying, I'm a trader, and you ask them, what do you trade? Indices. What are indices? It's NASDAQ. What is NASDAQ? It's an index. And you can tell that they cannot perfectly articulate what they are doing because they only have 1% knowledge of what they are doing. And that's exactly what happens when you join their trading get-rich-quick scheme hype. But if you want longevity and long-term profitability, you must invest in knowledge. In this series, you will learn what are indices, how are indices calculated, what are the most traded indices? Why are they the most traded indices? You will learn how to develop a winning strategy for trading indices, and I will also share the already working index strategies. So make sure that you are subscribed to the channel and your bell notification is turned on so that you will not miss out on my future uploads so that you can start trading what you know and understand. Indices are a measurement of a price performance on a group of shares from an exchange. For example, NASDAQ, everyone's favorite, also known as the US Tech 100, is an index and it tracks 100 non-financial largest US companies from the New York Stock Exchange. How so? Alright, let's break it down. NASDAQ is a modified capitalization weighted index, meaning that larger companies by market capitalization have a greater influence on the index's value. In simple terms, this is an index and the name of this index is NASDAQ. This NASDAQ is made up of 100 non-financial US companies. So, NASDAQ is not a single company, but it's a combination or a group of 100 US non-financial companies. And what you must know is all these companies are not equal in value. What do they use to measure their value? They use market capitalization. How so? The index is weighted due to the total market value of each company's outstanding shares. This means larger companies have a bigger impact on the index's total value. For example, if Microsoft did good this month, actually did better than all 99% companies that makes NASDAQ, then Microsoft will have a bigger impact on the index's overall value. Don't worry, if you don't quite get it yet. Take you and me for example. Let's say I'm Google and you are Microsoft, and both me and you, Google and Microsoft, are part of NASDAQ. Alright? Me as Google, I weigh 55 kgs. Well, I'm using a normal human body weight. A petite human like me at least weighs about 55 kgs. If I'm stock, then this will be my share value this month because I might decrease in weight next month, or I might gain some weight and weigh 60 kgs. But if you as Microsoft weigh 99 kgs, then you will have bigger impact on the index's overall value than all other companies. I hope it did make sense this time around. And this whole process of weighing companies is called market capitalization. Now, with this correct information to begin with, you can already digest this good quality information in your heart, in your mind, and already come out with a good working strategy if you want to succeed trading indices, NASDAQ in particular. Now, if you trade NASDAQ or you invest in NASDAQ, this is what you are dealing with. This is what is happening. This is what you are participating in. And if you want to learn more about it, go ahead and download this free premium guide. Actually, I'm using it to even record this video right now. It's on our website. As you can see, we still have a long way to go. It's a very premium, good quality information that I myself have compiled together for you so that you can have success trading indices. The sad truth about trading is that you can remain a complete beginner and unprofitable trader even after 7 years trying to navigate through trading, finding your way on charts, finding yourself in losses and continuous inconsistency because you are trying to trade what you don't understand. And there's no way you can win or have longevity in trading if you are doing what you don't understand. Indices are a measurement of a price performance of a group of shares from an exchange market. Shares, stocks, equities are all terms used to describe units of ownership in one or more companies. To learn more about stocks, shares, and equities in indices, you can go ahead and watch the full tutorial on mafigiforex.com. The link will be on the description box. This is why you should trade indices. Trading indices gives you exposure to the entire economy by just opening a single trading position. How so? Indices act as market barometers because they reflect the overall health and sentiment of a specific market or sector. For example, the US 30, my favorite pair, the US 30 represents 30 large, modified, capitalized US companies, and its movements can indicate the general direction of the US economy. By trading an index, you are actually essentially diversifying your investment across multiple companies within that index, reducing the risk associated with investing in just a single stock. Indices offers the exposure to the entire market through a single trading instrument, making it easier to participate in the overall market's movement. One of the most beautiful perks which comes with trading indices is simplified trading. Instead of analyzing individual stocks, traders can focus on the broad market trends and the economic factors which influences the index performance. Even though analyzing the individual stock can give you edge in the markets as a trader, since remember that the largest weighted company can set the market trend for the overall index. So don't sleep on it if you want to have momentum trading indices. Did you know that indices can be used to hedge existing investment portfolios? Yes. For example, if the investor is concerned about financial markets drawdown, they can short an index simply betting on its decline to offset potential losses in their stock portfolios. And you as a trader can speculate or hedge on the price of index rising or falling without ownership of the underlying assets with CFDs. And if you are trading indices with the recommended broker in the description box, they already come in CFDs. So you don't have to worry or be concerned whether you are trading the spreaders or you are trading the CFDs because that issue has already been sorted out. Indices are highly liquid markets to trade and they are extremely volatile. They make you get to where you want to go faster. Complete beginner traders can make 500 to 1,000 rands per day with micro lots trading indices. If you want to see profits while strategically trading without using any gambling techniques, you may want to focus more on indices and make sure that you have the correct information, because if you don't, you will lose lots and lots of money trying to trade the markets. As you can see for yourself, this is the only segment that we covered on this video. Make sure that you get the full guide. It's 16 pages and I'm giving it to you all for free on my website, okay? I'll link it on the description box. Make sure that you go and grab it and you can continue learning for yourself. I'll keep on uploading the entire series, explaining and trying to break down everything there is to you. May the peace of God rest in your heart. I'll see you on the next video.